The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 15, NASDAQ is down 14, S&Ps are off 10, NDX 100 is just about flat. It's Shake Off Thursday, man.
Why not?
Shake it off.
Is it Shake Off Monday, Tuesday, Wednesday, Thursday, Friday?
Okay, there we go. It is. There's no doubt about it. Gold's up a $6.50, traded at $15.76. You got silver up 35 cents, $17.84. Notes and oil's down 75 cents. Oil's getting whacked. It was down about $1.25 a little bit earlier. $52.58. That baby's going after the lower end of consolidation, which is about $50. Notes and bonds. Guess what? Higher price, lower yield. 10-year right now up 7 ticks, trading 131.08. The 30-year up a half a point at 162.23. And King Dollar off 75 ticks, 97.916. The euro is at 110. The yen is at 108.93, and the pound is at 130 to $1 US. And that 10-year yield, you got it up right there.
I just pulled it up, man. Quite a chart, right? The low, 1.54 on that yield. Just yesterday, we were at 1.66.
Right. And if you put this chart, folks, on a monthly basis, the bottom line is that my take, we're going to 1.3. You break 1.3, guess what? We're going to be at 1/10%. Okay? So whatever it is, it is. I mean, the bottom line, this has been going on for years now. I mean, every time that folks think about interest rates are going up, guess what?
We see those lows, 2012, 2016,
it's a monster,
maybe
man.
2020.
Yeah. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim, as we do every Tuesday, Wednesday, and Thursday. Folks, you want to understand the option market, option strategies. Great markets for this, okay? You can see these markets, what they did out here this morning, they tested the lows of Monday. Bottom line, shook it off, said, see you later, man. I'm going topside once again. We got Amazon coming out after the close. Bottom line, great program, 11 to 12 right here, Eastern Standard Time. If you haven't test-driven yet, the Thinkorswim platform, real easy to do. You're sitting on the site, hit the banner, bring it up. They'll allow you to trade with paper money. You can follow Kevin and his team every trading day. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. These markets are getting really interesting, and here's why. Here's what Oliver Rennick and I talked about this morning on the air. If you look at the 10-year yield, and where it is right now, 157.
Yes.
And you look at the Dow Industrial Average, all right? You can see where I'm going with this.
Yep.
23 of the 30 stocks have a dividend yield higher than the 10-year.
Amazing.
And all right, hold on, I've got more.
Oh.
But wait, there's more. 14 of the 30 stocks have a dividend yield a point higher than the 10-year.
Yeah.
That's staggering.
Right? I mean, if you look at some of these names, Walgreens Boots Alliance, 3.5.
Sure.
Dow, 5.6. Verizon, 4.3. Pfizer, 4%. J.P. Morgan, 2.6. I can go down the list. IBM, 4.7% dividend yield.
Right.
That is why when you look at this market and you see the E-minis down 8.5, you're like, why? Why won't they sell this market off? Well, think about it. This market is down. Our market opened lower because of foreign markets, right?
Yes.
And what happened in China leads to the foreign markets. Foreign markets down overnight. Our futures down overnight. But you look at the U.S. economy and what's going on in the U.S. economy, it's just hard to make a case to at least, bare minimum, get out of stocks. There's just no reason right now because there's nowhere to go. And earnings are doing well.
No, and your point, there is no doubt. This interest rate structure, I mean,
right.
When I really looked at this on a longer basis, if you bring up a monthly chart of that yield, this, on a technical basis, it hardly bounced at all. And we're talking about it on a monthly basis, folks. So when you have something like that, the lows are wide open again, man.
Sure.
I mean, and guess what? Just the case that you brought up, Kevin, we know how much cash is out there. So You know,
Right.
everybody's fat and happy right now, meaning the big companies, okay? So it's like, okay, what are they going to do? Well, what they're going to do is go after those dividends.
Yeah.
Because who would think, 10 years ago that, I mean, the phone companies have always been pushing out nice big dividends, okay, 4.5%. But 4% right now in this market is like a monster. That's huge money.
You can afford losses at 4% if the stock goes down. You can afford almost 2% a year losses in the stock price, and you're still making 2% on the dividend. It's
Right. And, inflation will take care of you over time.
Exactly.
It's pretty amazing. And, hey, Kevin, how about Tesla, right?
Oh, my God. That is ridiculous. I mean, it's here's the good news. The strategy that we put on yesterday and showed you on the air, we gave you two strategies, one for a more passive trade and one for a much more aggressive trade. Well, the good news is both are working where the stock is right now.
Amazing.
Both of them are going to work.
Amazing.
So, So, that's what you can do. But we came in with a game plan, a theory. We gave you an idea for a more, a smaller to medium-sized account trading it, and then maybe a bigger account who wants to play for the bigger move.
Sure.
We gave a play for that. So that's all we can do is educate, our viewers on how to play this fundamentally the right way, give you a menu of trades to do to look at Tesla. And good news is right now, as of 9 o'clock Chicago time, both are working.
Which is a beautiful thing, because then, just collect those profits. And, of course, Elon
That's
is
my definition of win-win.
Yes. No, big time. And, there's no doubt Elon's sitting there with a big blunt, right?
Oh, hey, who knows, man? Those Tesla offices this morning. We just looked up, Kevin. He's got 34 million shares, man. He is sitting pretty in a big way. It's pretty dramatic.
That's a big matzo ball he's got out there.
It sure
and guess
is,
what?
man.
He's got, and suddenly, a year ago, this stock you saw, public opinion was completely against this guy, right? The stock was in the one below 200. I mean, every article was something horrible about him, some hit piece or something like that.
Yeah.
And now he's Thomas Edison.
Every $100 is $3.4 billion, and it was sitting at $175 for the low in June.
Well, it's so cool. I wish I could pull this clip out. When Tesla was just starting, right? One of our listeners, right? His son was only like about 12 or 13 years old. He jumped on the air, and he says, "No, I'm buying this thing, and I'm going to hold this thing because I think this is the new Thomas Edison."
Yeah.
And I remember that day so well. I'm saying to myself, well, he's going to do fine, okay? But needless to say, we're not that far into it. Like I was thinking, 20 years. I think he's only 12 or 13 years old. You know what I'm saying?
Okay.
But you can see, guess what? There's a lot of other people that were believers, and, we'll see where it shakes out. But it's certainly been a success beyond belief for people that have been in that equity.
And guess what, guys? Catch your breath. Because today, we're going to do Caterpillar, and then we're going to do Amazon.
Oh,
and
nice.
if you think Amazon's not going to play today, Amazon's going to be amazing.
The big dog. That's right. I like it.
Right.
That's right after the close, folks. And we get the expected. Oh, look at that. You're going to love it. The expected move in Amazon's, folks, is going to be $60.
$60.
I love it.
Totally.
Kevin, you have a great one, a safe one, a great weekend. Folks, right here, 45 minutes from now. We look forward to the show, Kevin.
Always great talking to you guys. Thanks for having me.
You as well,
Great
Kevin.
talking with you. Stay right there, folks. Tommy and I are coming right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow is off 82. You get the Nasdaq off 29. S&Ps are off 15. And, folks, we got the Widowmaker, which is natural gas. And this has been a tough road for natural gas for so long now. We're already coming into February 1st. So you figure you get, what do we got, 6 weeks of, really 4 weeks of
winter, yeah.
You know, I mean,
we'll pull it up. I'm going into commodities. I'm going into natural gas. We're looking at the March contract, $1.85.
Wow.
Cheap natural gas,
unreal.
Man. And even since
that's after a pop this morning.
Yeah. Now, quite a decline, right? I'm just backing this up to even Tuesday. We're up there at $1.93. Volatility, though, from $1.86 on Tuesday morning, $1.93. From there, we've fallen off. We're at $1.85 right now, March natural gas. So we get the inventory numbers at 10:30. We're going to jump around and maybe see what kind of volatility trades we can set up. So jumping to, we'll start it off with our 11 a.m.s. $1.85 is a price point that we can gain exposure from. Always nice, because that's kind of right where the contract's sitting at, all right? Here's your bullish spread. Contract's 4 ticks in the money at 185.4. Now, you have a 7-tick spread here, just to be aware from, right? You know, you can buy it at 186.4. Not bad. You're buying it a penny above. I mean, even if you're just bullish, right? Not a bad trade. You buy it at 186.4. The market's at 185.4, so you're paying a penny above. You're risking $14, which is your risk down to 185, and you have 20 cents of profit.
This is the only way to trade natural gas.
I agree, man. With the inventories coming, with the movement we just see in the regular anyway. And then on the bearish side, you're going to be out of the money here because you're 4 ticks above 185. You got 20 cents of exposure down to 165. And again, not a bad trade if you want to go directional, man, because you're just paying all premium, no intrinsic value. You're slightly out of the money. You're selling it at 184. The contract's at 185.4. You only got to get down 1.4 pennies to break even.
That's pretty wild, man. So the market makers are not looking for a big move here. They're looking for some, basically, right?
Yeah, I mean, that's the 11 a.m.
They're not charging
If you
for
do
it.
both sides of it, you're paying 2.5 pennies.
Yeah.
So it's fairly normal, but let's just see how the noons line up. That's 11. I wonder if the noons are going to have the same price point. They do. Good. So let's see what they charge us for the extra hour. So we have our 11 a.m. here, the bullish spread, same exact price points, and you can see where this is ticking. Now, right away, what is going on with this
Look at that.
bid-offer spread. All right,
Huge bid-offer
Pay
spread.
attention, folks. Okay,
Yeah.
don't just go in there and say the offer's at 187.4. That seems fair. I don't know if that's fair because guess what? There's no bid-offer spread. There is a spread.
Right.
I would love to be a market maker if they're going to give you 2.5 pennies of bid-offer and just pair those contracts.
Right.
Now, with that said, contracts at 285.5. You're paying about 1.9 pennies above. Seems big. Seems big for the bullish side there.
Yeah.
When you can get into the 11 a.m. and even here you have 7 ticks. You know, to put things in context, folks, right? The market maker is willing to buy this contract at 185.7. It's trading at 185.5. They're only going to give it to you at 186.4. Quite a difference in terms of what they're willing to pay. But let's just see on the bearish side as well. Huge spread again, 2.7 pennies. So I would be very wary of those noon spreads with the bid-offer spread that's just mammoth. So maybe they're saying, 11 a.m., but you want that extra hour and a half?
Right.
We're not too comfortable.
They're not comfortable at all.
Exactly.
Right.
Let's just see how the dailies line up. So you have 180 for an exposure price point if you wanted for the daily, and 190 up here, just because it's had some movement today. Yeah.
So let's see what this baby looks like. Maybe let's see, NG active.
Yeah, March, perfect.
Okay, so, whoa, I see this went down and tested the lows.
Can you
of
add some
last
trend
week.
lines to this chart? I can't put the trend on there without some
Seriously.
visual aids.
Look
My
at this.
goodness.
So, the last low is 1826.
Okay,
We hit-
182.6.
We hit 1828 today.
Okay.
Light volume here, so that's a test of the lows at light volume. Okay, so I think we should get a bounce. Let's see, let's get that whisper number in there, see what happens here.
You're looking for a bullish bounce on that contract.
I wouldn't
huh?
buy it. I wouldn't put my money on this,
You
folks.
a
but that-
contrarian guy 24/7?
No, what's happening, it tested the lows of last week. I'm
Okay.
just that's where I'm going, and the volume's going to be tremendously lighter right now.
So they're looking for a decline of about 202 billion cubic feet. That number coming in at 1030. It's about 1023 right now. So if you're looking for a little bit of a bounce, you would be hoping for less.
Bigger drawdown,
Yeah,
right?
bigger drawdown if
Right.
possible.
So let's go,
What are you going?
I don't know, go 450.
450?
Yeah, why not?
Where are all these people using all this natural gas?
We'll see.
I'm just kidding. I know. We'll find out. So, nonetheless, I mean, that was quite a chart, man, on that
Isn't
natural
it?
gas.
Oh, it's
Just,
a sad-looking chart. man.
oof.
I mean, longer term, that chart still wants to go to the. We'll pull up. I got to do the generic to pull up the NG. I think we.
I mean,
did
it's
this
just
before.
crazy.
I think was it 163 or something? It's some outrageous number.
I mean, heck of a short from that November,
Oh, huge.
October, November.
And there it is. So, yeah, 161 there. Yeah, 161.
And remember, we covered this and we were saying, right? Lower lows, lower highs.
Yep.
Go 240 was the low in 2009. Buck 90, the low in 2012. Buck 87?
60.
60. I knew it was,
61,
buck 60. So you got, you're dropping 240, buck 90, buck 60, plus adding up the high,
Yeah.
650. The high here, 492.
Yeah.
And
Just imagine 490 to 180. That's pretty intense. And then, after the close out here today, folks.
can I just see before you get away? So $10,000. I just wanted to see what's your margin? Where are we?
We go like this. Let's see.
I guess you can pull up the exact
You can-
March. I just
you
did the
can- you can
description.
crack up.
We're in the generic. Can you go to the March? That's all.
NG.
Active, perfect.
Yeah.
Because so it's $10,000 per dollar.
Yeah. $1,870. I know.
So that means you're basically putting up. Yes, I had to square it in my head. You're putting up about 18 cents to 19 cents of movement in the contract.
Right.
For a speculator contract. And just since, November, October, we've moved from $3.
Yeah. Oh, yeah,
It's
yeah.
just mammoth,
yeah.
man.
Yeah. You've moved $18,000.
Yeah,
Yeah. it's pretty intense, man.
exactly.
Yeah. Oh. Excuse me, folks. So we'll get those numbers at 10:30.
Yes.
After the close out here, of course, Amazon.
Oh, boy.
And numbers on Amazon. So this is what they're looking for. $86 billion to the top line and $411 to the bottom line.
And look at, we were talking about it, man. Last holiday season, 72. They're growing at 20% on a $72 billion holiday number. And they keep, they're still, next year they're pushing 100.
Yeah.
The following year they're forecasting 117 for that holiday quarter. And I had the article up here. Let's see if we got it. Yeah. So it's going to be about what they're spending, too, on this.
The one-day deal?
Yeah. So in the last earnings report in October, Amazon said it would spend $1.5 billion over the holiday period to expand one-day delivery program, make it the standard for Prime subscribers, on top of $800 million invested in each of the 2 quarters. That's going to pay some of the profits. They're looking for 403. That's down from 604 a year earlier. But Bezos, man, he likes revenue. He doesn't care about profit. And they'll eventually get that profit.
Stay right there, folks. Tommy and I come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Natural gas, both the Whisper and the analyst number, they nailed it, right?
Pretty close, right?
Yeah.
The number coming in, stockpiles falling 201 billion cubic feet. Whisper and analysts somewhere 201, 202. They're showing 203 as the estimate up there. Seeing how that's reacting to the contract. Jumping over to the chart. We'll get it up. And what do you know? lower prices for natural gas. And we just traded from, when we were comparing all of those trade possibilities, we're a hair above 185.
Yeah.
And we're sitting right now at 184 on that first thrust to lower prices for natural gas. So we'll see where that trades. But the pain continues in that natural gas market,
there's
man.
no doubt. Unless you have natural gas and you're buying it.
Yes. And how about the pain for copper, man?
Yeah.
12th straight day for lower prices. The market pricing in a sharp hit, at least in the short term. Oh,
It says the longest stretch on record of down days.
Okay. It would make sense, man. We've written articles before on the probabilities of consecutive streaks, right? 12 in a row, man. You get to outlier events. I mean, it has to be, the odds that you do something 12 days in a row, even with a high probability event, very, very low because just statistical probabilities, man, consecutive events. So 12 days in a row, longest retreat in more than 30 years. On Thursday, prices in London slipped 0.6% to 56.06 a metric ton. Traders have been warning that a short-term outlook for commodities could be upended if manufacturers in China are forced to stay closed for longer while authorities fight to contain the spread of coronavirus. Now, with several major provinces extending public holidays, those fears look like they could be realized. Several provinces, including Guangdong, maybe, Jiangsu, we'll have to get all these, have extended the Lunar New Year break. In Hubei, where the virus originated, holidays will last until at least February 14th.
It's a long way.
I believe the last days we had, in terms of when it was extended, was February 3rd, which is this coming Monday.
Yeah.
February 4th is the following Friday after that. So I believe you're talking about 2 weeks from this Friday, 2 weeks from tomorrow would be February 14th.
It's a long time.
And check out that copper contract, man. Just the pain begins 17th or 20th of January, whatever you call it, from about 6,300 per metric ton down to now 5,600 on the dot, man.
Big numbers, man.
Yeah.
There's no doubt. So let's go pull that contract up.
Before you jump away, how about that China's copper consumption surging? Check out that. For tons for the year, and you see why. If China slows down, man, that copper market, look how much copper they use. It's just amazing.
And
even
think about how much copper's in the world. This was pretty wild, too. Think about that.
And it's remarkable if you look from, China, were they growing in 2006? Yeah, I think so. But they were using 400,000 versus a million tons, right? And you're almost at 1.2. So they've tripled how much copper they're using from almost 2006. Huge numbers.
Isn't it?
Yeah.
There's no doubt. So we'll bring up that contract right now and take a look at it. HG, where are we at? It's HG0. Okay, HG.
Right down there. Generic first. Yeah.
Okay, yeah, sure. We can do that. So, come on, pop up.
No, it's not loading, huh?
HG.
There we go.
There we go. Okay, so you're at 252. Wow. That's pretty intense.
It sure is, man. So I guess those numbers we were looking at in that was London, and this is a different futures at 252 versus the 6,000 or whatever we're talking about.
Yeah, because that's London's the metric tons, and so let's see, what does this say? This says copper is the world's third.
So this is for 25,000 pounds versus for a metric ton?
Yeah, perfect.
Okay.
Thank you.
Yes.
Okay, so 252, and as we're talking, this has been a one-way move, no doubt. We're to 288.
Yes.
And, well, the bottom is consolidation is 249. There's no reason it doesn't hit that. Yeah. Oh, look at those bars. Oh, man.
Watch out.
Yep.
You go back into the description afterwards. I like seeing how much the speculator, how much, because you got people probably making a killing and losing a killing the same way, right?
There's no doubt. There's no doubt.
So what are these ticking in? 1 point is $250.
Yeah.
This has moved about 30, so every 10 is going to be 2,500, which is just under a speculator, and you've gone down 30, so it's 3 times what you would have had to put up in the last 10, 12 days.
Right.
Flip side of that is you put up 3,000, you've made 7,500
Yes.
on that run lower.
Right.
Yeah.
Right. Big numbers. And,
Yes.
the movement in copper, there's no doubt. China is the name of the game there. There's no two ways about that. Let's go take a look at that gold contract. So, gold's caught a bid, and for a lot of different reasons. I think probably one of the biggest ones is that you had the Bank of England. They didn't go up on their rates, and that was like kind of shocking the market over there because But this is Carney. He's ending his term.
Yes.
New one's coming in. You know, the vote was like 5-2 or 7-2 or something, not to go up. But I think going forward, they realize that, hey, we're going to be going down. He might have just left it for the next person.
Okay.
You know what I mean? So we got up 950, but what you're going to see here again is that there's not enough volume in here. 43,000 contracts at this time of day is not great contract volume. It won't be bad, but in order to break these highs out here, you need, I'd like to see it at like 150 right now, because when you take a look at the last 2 times we were up here, that the market didn't hold also, that the highs didn't hold. As you can see, look at 398,000.
Sure. Over
here, oh my God, 559. I'm wondering, we're probably rolling right now too, though. That's from that's the February contract. GC. Let me see this for a second.
There's April.
Yeah, let me just look at this for a second. Oh, there is. We are rolling. I like it. Okay, so April, even though they're saying not the active contract, this is actually the active contract now. See this? So when you look at it, folks, this is 224. So now you get action. That, you know, isn't that intriguing?
What was the volume? Can you pull up the volume on it? That's before we. I just want to jump on. To see when it started ramping up even. Yeah, so maybe in the last
couple of days.
Yeah, this week. All right, so we're at 225,000. Can you go back to that February?
Yeah, GC.
There you go.
4,300.
43,000. Yeah.
43,000. Yeah. So that's good news.
Can I just add I'm just always curious how fast it's fallen off. Yeah. So maybe even in just like the last couple of days.
It looks like the rolls right now. Exactly.
Yeah.
Right. So that's good. That's good news, man. That's the bottom line. That should go through into the GDX too. No, there's not enough buyers on the GDX right now, man. That's, GDX, of course, is the equities versus the actual future. So if we did the GLD, that would be the exact equation. But look at that. GLD is going to need more volume also. Definitely need more volume. Yesterday you did 5 million. Oh, today's good too. Yeah, we're 2, yeah. Okay. That's not bad. At 2 right now, that is saying that we will do 9 to 10 million, which is great, because that's what it's going to need to basically sustain higher price. And King Dollar is the first day of King. Well, last 2 days, King Dollar hasn't been able to hold price. It got the higher highs. Today's the first day that we actually got a little down pressure on it, down 139.
Oops. I was just going to check back. Sorry to jump. I just wanted to see. Still sitting on that natural gas at about 184 on that contract.
Our phone number is 877-927-6648. We have the Dow down 127, NASDAQ our 50, S&P's down 21. You got a little selling on it.
Yes.
Stay right there, folks. Time out. Come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's off 171, Nasdaq's off 60, S&Ps are off 24. Let's go take a look at the Dow and see what the movers are inside of this Dow Industrials right now. Taking it up, Microsoft. Microsoft's the savior of the Dow today, putting 25 positive points, Coca-Cola 9. And I heard you on your show that so the Coca-Cola cans are getting smaller again.
I guess
right?
that's one of the things I actually talked about in their earnings. Not bad. Whether it was just the appeal of them or selling a little bit less soda at the same price, it seems like soda costs them basically zero.
I know.
So it's probably more of an appeal, maybe something of that degree.
I like them. I like those little cans.
Yeah,
I mean,
they're cute, right? Why not?
It just depends when you're looking at the price sometimes, because the price is astronomical.
Of course.
Yeah, it really is.
It's probably
per ounce.
a penny of soda for them, and totally.
Taking away from it out here today, you get Apple putting 17 negative points, Boeing 16. IBM 15. So you don't have one big equity, and this was it gets a little bit dangerous actually when they all got spread out.
Sure.
There. Do you know what I mean?
Yeah.
So let's go to our man John in Philly. John, what's going on, brother?
Good morning, Tom and Tommy. Thanks for taking the call.
Morning,
Absolutely.
John.
How you doing, man?
I'm doing very well. I wanted to ask both of you, following up, I asked you about a stock Tuesday that's on my shopping list. That was Equinox, a gold miner. Today I'm calling to ask you another name that's on my shopping list potentially. I have no position, haven't for a very long while. It's First Solar. I'm wondering from a technical perspective if you can see the case for a bottom forming. And secondarily, I'd ask the both of you, do either of you know of any viable candidates in the solar business?
So if we take a look at First Solar, folks, okay, let's see. So the low fee is 47, the high is 69. They're looking to take in 1.8 billion.
I know. It jumps out.
This is interesting.
This quarter is quite a number.
So they're
for
saying
them.
they're going from 546 million to 1.8 billion. I'm not quite sure.
And then they're
where
going
that
right
comes out
back
of.
down, and they don't have 1.8 listed throughout even 2021 for a quarter. And they're looking for mammoth profit. I don't know what they have going on in terms of what they revenue. Do they sell something off or something?
They're doing something.
Yeah.
Technically, John, I would wait until this looks to me like you came off the last bounce with volume on the way down. What was that, 3 weeks ago? Yeah. The week of the 17th.
Yes.
13 million shares. It's drying up a little coming down at this level, but
I guess a couple weeks ago would be not last week, the previous.
That $43 and that $46 is really sticking out.
So you're looking at the low of 2018 kind of back there.
That's sticking out like a sore thumb. And then if you look at as to who else is in this business, let's see what they say.
I personally am not hip with the solar companies or have them at all on my radar, unfortunately.
So what I just did here, folks. If you're watching Tiger TV, you can put you take the equity, you put it. I put it's RV. I
Is it
believe.
Rivals maybe?
The RV, and then this gives you other people that are
Your
that
peers,
are,
it calls.
yeah, that are in the business. And most of these names I don't know, but if you look at these names, they're all in the red. You know. So,
Tom, I thank you on that. I'll just give you some input. Here's what I do know. Of course, First Solar is in a couple of businesses. One is manufacturing the solar panel modules that they sell to a great number of customers, and then they also are developers of solar power plant operations, and that big surge that you just pulled up there when you looked at the quarterly revenues and profits, that was just the accounting for one of those large projects being accounted for. So that stuff is lumpy. I understand that.
That's lumpy, all right.
What I don't understand is if there's a profit-making opportunity going forward. So I appreciate you going through the look-see there.
yeah. Cooking, brother.
Thank you.
Have a great
Bye.
one, man.
Thanks,
Have a
John.
safe one. Let's go take a look at that oil market for a second. So CL, let's see, the active contract.
Yeah, we got a 51 handle on the price of that March crude this morning.
Yeah, 51.92. 397,000 contracts.
Boy, if I imagine there are some commodity traders out there that got hurt and that made a boatload.
Oh, there's no doubt.
In the last couple weeks because oil, copper,
Yep.
right? The run. I mean,
It's huge.
you had oil really starting from what day is that huge day down?
Yeah, that was the big one.
January 8th, let alone if you just got it when the coronavirus fear started back on January 17th or 20th. Yeah.
And then, tomorrow, Exxon Mobil and Chevron.
Yeah.
And these are both in trouble.
It looks like it.
Yeah. Exxon broke its consolidation. Now, this is a serious consolidation,
Careful
too.
going after dividends, right? Because these are dividend
Seriously.
stocks, man. But boy,
Seriously.
oh boy.
I mean, look at this. This is a decisive break, man.
Yes.
What we're looking at, you're looking at the low of 2015, which was $66.50.
Yeah.
You're at 63.53. I got to bring this back further to really get a handle on the level. And this is where the danger comes, is that it looks like it can run to the bottom of this, which is 56. If you ever break that 56, it's like, wow.
I mean, outside of, and God forbid it ever happens, like war actually breaking out in the Middle East. I mean, we have heightened tensions, almost can't get any more heightened prior to war. You have missiles hitting the embassy over there. You have just as heightened as it can get, and
Right.
Oil just pulls back.
And
man.
oil can't handle it.
So, and yeah, it has to do with the woes in China, but that ain't going to end overnight, man. We see now that factories closed two
Oh, yeah.
weeks from Friday. That is a mammoth closure when you talk about what that can do. When you have 2 weeks, that's looking at 3 weeks almost, and that's as of right now. They're already closing it to that degree. What
Yes.
happens if it's still going? There's no
Totally.
saying that that's when things come back
And
online.
then, what happens, I guess, if you put yourself in their space, the last thing I want to do is go back into a factory, be right next to each other, and
Yeah.
living in all those compounds.
The tough thing there is that you have people living not even paycheck to paycheck, right? I mean, very impoverished to the point of, I'm just putting it, you know what I mean?
They live in barracks. So I've seen the factory.
Right.
It's
I'm
just
just
like
saying,
a
if
military barracks.
they're at home and they have no money and their family's not eating, I mean,
They're gonna go.
That's the
I'm
tough
just,
part. Of how-
no, I'm with you there, but it's
Yeah.
like, oh my God.
No, I agree. No, we're
So-
very fortunate to live in America, where thankfully that doesn't happen, where you have to make a choice to go work in a factory, or you might be getting some virus because the only other alternative is your family doesn't eat, right?
Right.
Yeah.
So if we look at the NDX 100, folks, the
Explain to me the stock TSLA. No, go ahead.
yeah, taken away from it is that we get Facebook down 6.6%, Alexa Pharmaceuticals up 4.3%, Micron Tech's down 3.3%, and JD.com's down 3%.
Okay.
Now let's get into Facebook. So bottom line, Facebook, it gets down to 204 today, at 208. So
They were okay numbers. I tell you what, can I jump to? I think I even have, just because the article, I talked about it this morning, because if you get into it, right, And there we go, coronavirus up to 200 people. We'll cover this after the break, but the heart of this having to do with the fact that revenue growth, 24.7%. That's the fourth straight quarter that the company delivered sub 30% growth.
Oh, so sad.
Exactly. So keep it in context, folks. Exactly. We'll go over more of it after this.
24%.
Exactly.
Oh my God. Stay right there, folks. Tommy and I come right back.
Man, that's the...
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Market's going after its lows once again. You get the Dow down 228, Nasdaq off 82, S&P's off 30. And, last night, folks, our man, Mr. Larry Pesavento, gave a great webinar. It was an hour and a half long. You can still basically take advantage of this.
Yep. So the archive's been produced right after this program. Subscribers are going to get an email. It'll be available within about a half hour or so. So I encourage people, head over to the front page. You can watch the archive of that webinar this afternoon or as many times as you'd like over the 30 days if you sign up. New subscribers, 30-day money-back guarantee. And Larry putting out another update for his subscribers already this morning, every day. So great webinar. Still time to check it out. And if you signed up for it, that archive will be available probably within the hour. You just go to your account page at TFNN, that archive available right there. So yeah, market's going after, right? Just for a little context, this was Friday, backing things up. There's your all-time high in the S&P on Friday. The slide begins. There's your gap from Friday till the open in Sunday. On futures, we trade to a low early Monday at 32.33. Market makes it all the way back up. to about 32.92. And man, oh man, look at that sell-off as we approach the lows we had overnight. That number, 32.39, you're trading 32.41 and dropping as we speak on those S&Ps, man.
Yeah, you get the Dow off 239, Nasdaq off 85. More numbers after the close today.
Amazon. And to finish it up on Facebook, so I was saying, they crushed it out of the park on everything except for they only grew at 24.7% for revenue. Earnings, 256 versus 253. Revenue, they beat at 21.8 versus 20.89. Daily active, 1.66 billion.
Big number.
Monthly active, 2.5. And like you said, average revenue per user, $8.52. So yeah, Facebook, they're getting hit this morning. But keep that in context, as I think they'll be okay growing at 25%, even if their multiple comes down just a little bit.
Stay right there, folks. Good Think and Swim coming up next. And I'm Mr. Basil Chapman, Steve Rhodes. Stay right. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Bam! Go get 'em, folks.